Welcome back to the States. I'm Greg Bishop. Earlier this year, for the Everyday Economics podcast, Center Square publisher Chris Krug and Ph.D. Economist Orphe Divounguy, they discussed the barriers that remain in today's economy for Black families looking to buy a home.
You're saying that Black applicants are denied at higher rates than white applicants in all 50 of the largest U.S. metros. The counterintuitive finding in that is that the widest Black-white denial gaps are not in the most expensive housing markets. So it's not really a city issue, or I think a lot of Americans would think about it as cities, but actually happening in places where there's a lower cost of living, smaller markets. So let's start at the foundation on this. When a bank turns someone down for a mortgage, that gets reported in a federal data set, this Home Mortgage Disclosure Act data. In plain terms, what is a denial gap, and what do the numbers show when you lined up Black and white applicants across the biggest metros? Let's start with the biggest metros first.
Totally. Well, the denial, so what the study does is it looks at the denial rates, right? And the gap, for first, Black applicants are more likely to be denied a mortgage than other applicants. But in this case, we look at white applicants. And that gap is true across the country. Now, the big question is why, right? Why is it that Black applicants versus white applicants would be more likely to be denied, a mortgage? And what does the data show? Well, the data show that before we go into the regional differences, I think the first thing is that, higher debt to income ratios are a problem. Right? When you show up to apply for a mortgage, your credit score matters, your debt to income ratio matters, the cost of that house that you're buying, right? So the size of the loan is going to matter, right? And so those are factors that go into the application. And what you learn very quickly is that, the thing that matters the most, right, for the gap between the acceptance rate basically is the fact that in places where you have in places where you have bigger gaps in terms of financial readiness, right, in terms of having lower debt to income ratios, in terms of credit scores and all of those factors I just mentioned, you're going to have wider gaps. It's very intuitive. If you have a big population, two different populations, and one group, they're very similar on all characteristics except race, but one group has higher incomes, lower debt, lower credit scores, they're less likely to be denied than the other group, right? And so that is what this study shows. And what I alluded to, counter to intuitive finding, so a lot of people would have thought, well, maybe it's more true in markets that are more expensive.
Yeah.
It happens to be more true in markets that are less expensive, lower income markets, actually, where people are actually more stretched financially.
Yeah. But whenever you talk about, I think this subject, in the broadest term, right? The arrow points back to, the redlining that was brought upon by, FDR, Franklin D. Roosevelt, way back when, in that era, and that's not what this is, right? I mean, this is about qualification. It's about income, and about credit scores, right? I mean, but why is it that Black Americans in smaller metro markets are having such a difficult time? Is it about opportunity? Is it about job qualifications? Is it about, what's the heart here? Because it's not, it's not about racism, right? It's about the numbers.
Well, look, it is about the numbers, but here's the thing that is of course, you mentioned redlining. I think it's important to mention red. You can't deny, basically.
I don't think we can have this conversation without talking about redlining, right?
Of course, and we cannot deny the long-term impact of redlining. the fact that basically today, especially today, when housing has gotten so expensive, a lot of people get their down payment from what I would call the bank of mom and dad.
Yes,
right?
you'd love to refer to the bank of mom and dad, and
right.
as a mom and dad who's become, well, not yet become a bank, but potentially could be a bank. I love that line.
That's right. And so part of the problem with redlining is that for generations and generations, fewer Black families had access to home ownership. And we know that a lot of times the bank of mom and dad, the funds that come from the bank of mom and dad come from the equity that they've accumulated as homeowners over the years. And so with fewer parents having access to home ownership, Black kids today don't necessarily have access to that equity that they can use to buy their own homes. And so we can't sweep redlining under the rug because it still plays a role today, right? Now, of course, this study doesn't dig into that. It says, look, the effect of redlining has persisted, continues to persist, but then, you show up, of course, at the mortgage lender's office, and it's already kind of too late. I think Black families have to work harder, much harder, to overcome the fact that they don't have access to the bank of mom and dad, right? Yeah. And to get their financial situation in order, right?
As soon as possible, and be conscious about it, right?
Because of what you mentioned, because of redlining, it just takes them longer to be financially ready, to have accumulated the savings for that down payment, right? In order to go ahead and to have that clean bill of health, financial health, in order to go ahead and apply for a loan, right? And get approved for a mortgage. So all of those factors are at play here. Of course, this report focuses on the financial file at the time of the application. Right. And when you look at the financial file at the time of the application, you see this gap, right? Yes. And this gap is bigger in lower income markets, less expensive markets, where families are likely more financially stretched in the first place. And that's why you see these gaps are much larger in those smaller markets where incomes are a little bit lower, where people might be carrying higher debt to income ratios.
I always enjoy these conversations, and I think that that's maybe the clearest explanation that I've heard on this disparity yet. So thanks for everything, Dr. O. I really appreciate it. Make sure you read Orphe's Everyday Economics column every Monday at the Center Square and listen to what we have to say each weekend on the Center Square Radio Hour.